Hello, folks, and welcome to today's lecture. This will be a quick breakdown on the euro trade. Before I start, this is not a financial advice. This is monitoring and explaining price action as it is right now. So, before I dive into the actual system or the actual reasoning behind shorting such bullish market, short-term bearish, long-term bullish, and shorting range high to range low, or shorting OTE, or and adding into a 50% position. Before I dive into that, I would like to explain some points into how I personally see um, price when it comes to a systematic approach. Which when I say systematic approach, it means something that repeats in my eyes and I look for every time. So what a systematic approach actually is I like to see it this way, right? It starts purely by identifying the bias from a higher time frame perspective, and it first starts from the type of market you're trading, which means if I'm framing a bias on, for instance, fiber and cable, it's not the same as framing GPY or CAD or NAS, right? If I'm picking EU or GU, they're kill zones, and most of the swing points that forms are in London, correct? But if you pick, for example, GPY, then it actually has a kill zone within Asia. We pick NAS, it has or the main zone or the main kill zone itself is New York, and then most of the swing points are formed within 8 to 10 a.m. You eliminate 7, you eliminate London close, and you purely trade NAS's 8 to 10 a.m. So it changes from a market to another. So if I'm picking and choosing fiber and cable, then I understand this idea of submitting to London and London's kill zone when it comes to daily candles, and then even all the way higher to seasonal tendencies, where most of the swing points form at Q1. So a swing point of a yearly candle forms at Q1. Correct? You're submitting to seasonal tendencies, right? Monthly profiles, weekly profiles, and especially daily profiles. And a lot of times, I can decide this question of which ranges to trade. All of you are trading daily ranges and then holding based on the position you're in for a weekly range or and a monthly range, right? Daily liquidity pools and a daily total soup or selling a daily high usually allows you to hold for a weekly or a monthly purpose or position, right? But holding a 4-hour hourly total soup usually allows you to hold below weekly ranges, couple daily ranges, right? Sometimes a daily range or below. But it all comes to the position itself. So before I mention the actual breakdown, then you need to understand that, and you need to understand that the higher time frame consists consists of four main factors: the order flow, the highs and lows, which by the way, order flow takes us to all the next. If you frame order flow correctly, you're gonna frame the next also correctly. This gives you a good odd to add to your bias, and then the rest are tools to identify where do you want to sell, how do you want to sell, and when do you want to sell exactly. Highs and lows, PDRAs, and eventually candle closures in this order, right? The reason this is next is because all you're doing is taking a low to a high or a high to a low. If you're purely trading liquidity and price action, then you're prioritizing this than that. Because even PDRAs are lower time frame liquidity pools. And previous sell side and buy side delivery got engulfed. Balanced price areas, aka ICT order block or ICT breaker, right? But without going in details, the higher time frame consists of this. Now the lower time frame is where time gets involved the most, because you're either using the higher time frame. When we say higher time frame, is the ranges, right? Daily, weekly, monthly. For a candle to be a range, it needs to be timed. And if you're implementing anything below the daily as a range, such as 4 hour and hourly candles as ranges, then you're most likely going to be wasted within a lot of, lower time frame structure, which means daily plus, correct? Lower time frames where you implement the time, and it's going to be as follows. You use the higher time frame to execute, or excuse me, you use the higher time frame to for bias, lower time frame to execute the bias, lower time frame risk, higher time frame reward, or and you're using the higher time frame to frame and execute, lower time frame to confirm the higher time frame bias. So sometimes or I know a lot of students that don't even use the lower time frame. They purely trade higher time frame. So if you get this perspective correct, then you're going to understand that on a lower time frame basis is when you implement the time the most. And it depends whether you use it for entries or to confirm the bias and the execution or get a better execution itself. Right? But I'm not gonna dive into lower time frame because I'm not gonna touch about the entire thing here. I'm just gonna talk quickly about the bias wise. So as you can see, what you need to understand and get from here, because I'm not gonna touch into anything higher than the monthly. It's a little bit more detailed than it should. And then the weakness in price really what creates the entire idea, right? And now the sequence of ranges really starts by the previous delivery, right? We mentioned the seasonal tendencies and the type of market you're trading into the higher time frame, lower time frame, but what's in between is the type of delivery, which is a word I mention a lot, and it is extremely important. So post expansions, ranges, ranges, reversals or continuations, right? Or post expansions, retracements, and so on. So from this perspective, you're understanding one thing is that we're coming from an expansion. So rate expansion happens to be at the beginning of the year, right? Rate expansion, then eventually a pause and a range. Now, is it arranged to reverse, arranged to retrace, arranged to continue? I couldn't care less. That will be a topic for later. Again, what I'm interested in is the top of a yearly candle formed short term, long term. Again, I don't care. I need to be right during the time of the execution into the time of me closing the trade. So long-term bias is to be discussed later, really. And it's extremely useless, by the way. But here, from the time the expansion occurs, you're suspecting protraction, and if you trade retracements, then gaps must be found, right? If you ever trade a retracement with no gap as a target, or at least a range as a framed idea for a retracement to happen, then you're completely suicidal. So a top forms, yet you're long in. Bullish market, down close candles as ranges, and so on. Then rally above a top, and whenever we rally above tops, I'm not really seeing rejection of lows as much I'm seeing rallies above tops. So I want you to think about lows and highs as dealing ranges, and every rejection of a low and breakout above a high is a new dealing range created. And if there is an absence of rejection of low, but there is a breakout above a high, there is no dealing range. Vice versa. If we break a low, never if we reject a low, never break a high, there is no dealing range. If there is no dealing range, there is no trade idea. Why? Because there is an absence of potentially rejecting liquidity pools and potentially rejecting PD rays. And PD rays only work when liquidity is taken. That's a fixed value. So what I see is absence of dealing ranges on a lesser time frame, such as the weekly. And then eventually every move above a top is a rejection, which means now lows or bullish SMTs, which is the exact same thing as total souping a low. Bullish SMTs are not causing breakouts, right? Then lows rejected, highs rejected. And then closing below higher prices and closing above lower prices. Essentially, that's what a range condition, or that's where a range condition starts taking place. And even more, a or where we're coming from, a previous price delivery becoming, or being an expansion, excuse me. So then the sequence takes place when the yearly top starts, and you need to understand that a yearly top is formed by a weekly raid. So a weekly liquidity pool, swing high, whatever you want to call it, taken above the open into some sort of a premium level to sponsor the move, is going to cause a yearly top to form, or a yearly bottom to form, depends on the sequence. Here you're looking for a top, or you're not looking. Once it forms, then it's very welcomed. But here a top forms for a protraction. Now you can justify it by the quarterly gap, or you could justify it by the monthly range. Either way, the way to trade retracements it is either through a range or through a gap. No in between. So then the top forms, and then the sequence begins on a lesser time frame, which if you follow on a higher time frame, it wouldn't make sense. I wouldn't pay attention to any PD rays formed on a monthly because the monthly is purely ranging, right? And I don't want to look at a market that is ranging, and I don't want to look at anything besides highs and lows, or excuse me, not highs and lows. It's extremes. If I want to trade range high to range low to range high concept, or if I want to trade within the range, the concept of higher time frame range, lower time frame trends, then I'm purely gonna use rejection blocks and SMTs. That's a topic for later. Then eventually you're trading weekly range, you're using a weekly chart as your main factor. So a top, break below, OTE slash failure swing, right? We already discussed this piece of price action previously on the group. And then eventually a second leg. Now I'm interested in the second leg more than the first one. The second leg as a sequence, which means high to low, then a low over retracement put, OTE, 50%, range, whatever delivery it is. On this instance, OTE, sponsorship, SMT, then a second dip. Now I'm interested on the second dip usually to understand it's usually larger than the first one. And if we fail to break below the first one on the second one, it's usually a larger range or failure to form a further sequence. Again, whatever happens below the gap isn't really a topic to be talking about right now or to be discussed right now. The second leg starts, and the type of delivery is what preoccupies me the most, which means that it starts by a range raid or range SMT breakdown, correct? From the time we close twice below the low, below the gap, that automatically means it's either a larger range if you don't pay attention to the higher time frame, number one, or it's a sequence of OTE second leg. So here, from this perspective, a gap that broke the low, excuse me, before we dive into that, engulfing bullish key levels, engulfing lows, the SMT tops, creating bearish key levels below lows. Liquidity pools, so I'm looking for a weekly top. Hourly liquidity pools that are being attacked above the gap, if possible the gap itself, are to be traded for a swing position. So I'm thinking of selling liquidity pools here, and I'm thinking of selling them into the gap. And again, I'm looking for an hourly liquidity pool to be taken above the opening price of a weekly candle. Alright? So then, and it makes it even better for to be a daily liquidity pool as well. Right? Now if we cross the opening price, which was here, any rally above the open of Friday and of the weekly open, which was here, into the weekly candle's top, and what makes it even better is the color of the candle, right? Or excuse me, or the gap itself. Here is the color of the candle. So any liquidity pools that are being attacked above here are to be sold, right? Then the first breakdown took place. That was a breakdown that was presented previously, right? Now here, what do you confirm exactly? If we ever come back here, that bearish key levels are being created, respected, and causes breakdowns, Essentially, you're confirming a bearish order flow and not a range. That's all you need. Now, there is a sequence. So you either sell this candle, right, for daily range purposes, or the second this candle doesn't print to the downside, now you're suspecting trend, continuous trend, and not an expansion. Expansion is series of, say, up close candles with no pullbacks. If you're expecting a trend, which is clear here, trend, retracement trend, retracement trend. Expansions is a one-sided candles move into one direction. And whenever the opposite side's color created, there is a retracement taking place. But that's again a topic for further sessions. But here, the first breakdown. Now, what are you thinking of? You're thinking of selling above here into here. Long wick, you're picking the wick. You have a liquidity pool inside an existing key level, and then you have a daily trend. And what ends daily trends? Weekly key levels. What ends weekly trends? Monthly key levels. What ends monthly trends? Quarterly key levels. What ends quarterly trends? Yearly key levels. Daily trend into a weekly key level. Now all I'm thinking of for a higher time frame entry, because I use the higher time frame to enter, to frame and to enter, and I confirm by lower time frame order flow shifting at the time I enter, that confirms my trade idea. Rally above the open, above a daily liquidity pool into the weekly key level. And all I'm thinking of is being positioned above the weekly open, right? Into a less likelihood of a top to be reached. I'm looking for a balanced price area, and what's above it's 50%. The nearest key level or top happens to be both as an invalidation. Then it eventually sell off, right? Holding the previous execution into the second execution. And I mentioned previously, any rally is to be sold until the duel, if I'm right. Correct? Now that's all you need. A key level and a high to sell above, right? An up close candle in a bearish market, a potential order block, and then to hold, and for this to become a break even, is a close below. Engulfing bearish key levels in a bullish market is not a sign. Engulfing tops in a bearish market is not a sign you want to hold through. Right? Then all these liquidity pools are going to become further targets in the future. Now, anything more detailed than this is not to be discussed here. So I'm going to end up this session right now. When it comes to higher time frame and order flow and ranges and highs and lows and the slightly PD raise, hope that was insightful. For everything else, it will be discussed maybe in the future. I don't know. Be safe, folks, and I will see you soon.